Here's a bold statement. Even as Modelo beer continues to dominate shelves, like the one pictured at a Safeway store in San Anselmo, California, in October 2025, its parent company, Constellation Brands, is facing a storm of challenges that have forced it to lower its full-year guidance. But here's where it gets controversial. Is this a temporary setback due to macroeconomic headwinds, or a sign of deeper issues in the beverage industry? Let's dive in. On Monday, Constellation Brands, STZ, reported its fiscal second quarter earnings, surpassing Wall Street's expectations on both the top and bottom lines. Earnings per share came in at an adjusted $3.63, beating the expected $3.38, while revenue hit $2.48 billion, slightly above the forecasted $2.46 billion. Despite this, the company reiterated its lowered full-year guidance, citing ongoing economic pressures. Shares rose about 3% in after-hours trading, but the optimism might be short-lived. For the quarter ending August 31st, Constellation posted a net income of $466 million, or $2.65 per share, a stark turnaround from the $1.2 billion loss, or $6.59 per share, reported in the same period last year. Excluding restructuring costs and other one-time expenses, earnings stood at $3.63 per share. However, net sales dropped 15% year-over-year to $2.48 billion, and the operating margin shrank by 200 basis points, partly due to aluminum tariffs. And this is the part most people miss. While CEO Bill Newlands emphasized the company's focus on strategic goals like distribution gains and brand investment, the broader macroeconomic environment continues to weigh heavily on consumer demand. In September, Constellation slashed its full fiscal year guidance, cutting its comparable earnings per share outlook to $11.30 to $11.60, from $12.60 to $12.90. A move it reaffirmed this week. The company also expects organic net sales to fall 4% to 6% in fiscal 2026, down from earlier projections of 1% growth to a 2% decline. One particularly intriguing and controversial point is Constellation's observation of lower demand from Hispanic consumers. The company attributes this to concerns over President Donald Trump's immigration policies and potential job losses. Is this a fair assessment, or are there other factors at play? Let's discuss in the comments. Looking ahead, Constellation executives will host a call with analysts tomorrow at 8 a.m. Eastern Time. Will they provide clarity on these challenges, or will questions remain? One thing's for sure, the road ahead for Constellation Brands is anything but smooth. What's your take? Do you think the company can weather this storm, or are these headwinds here to stay?